Hey everybody, it's Mauricio Raoul here, founder and CEO of Premier Law Group, your premier syndication attorneys. And today we're going to talk about how to 1031 exchange into a syndication. Now, a lot of people are surprised to find out that you can do this because, again, a 1031 exchange is when you do what's called a like-kind exchange, which means if you own real estate, you're going to exchange into another piece of real estate. And with a syndication, what happens is you own real estate, but then the syndication's in an LLC. So you go from direct title into LLC units. That's not a like-kind exchange. And so that's where the trouble comes in. But as we're going to find out today, there's a way to structure this, which does add a little layer of complexity, but it can be done. Before I go into the examples, a couple of key things to point out. Number one, it's very important to be working very closely with at least two of your providers. That will be number one, your 1031 exchange intermediary. Obviously, that's going to be required to do a 1031 exchange, but you want to always be in communication with that intermediary, letting them know what you're doing and making sure that they're signing off on whatever structure you're coming up with. And the second one, of course, is your tax professional. 1031 exchanges are obviously a tax-based investment, and so you want to make sure you're working with your CPA, again, to make sure that you're not blowing any exemptions by the way you're structuring this. So let's go right into it. I was actually at a conference last week speaking, and there was some confusion as to really what exactly the 1031 exchange looked like. So just give you a quick overview here. Typically in a 1031 exchange, you have yourself owning a piece of property, and then you sell that property, and you take those profits, and you go and buy the next property. And according to the IRS, even though you're buying and selling a piece of property, they're going to consider that an exchange, which is why it's called a 1031 exchange. 1031 is the section of the IRS code that covers this. And again, you're not really buying and selling, you're simply flipping or switching or exchanging one property for another. That can be done in your personal capacity, or it also can be in an LLC. If you own an LLC and you own that property in the LLC, well, when you do a 1031 exchange, you just want to make sure that the LLC is the one that owns the other property. So how do we do this with a syndication? Because again, when you do a syndication, typically a syndicator owns the property in the form of an LLC, and the investor becomes a member of the LLC. So the way we do this is the person that's coming in from a 1031 exchange. So let's say somebody sold their property and now they've got $100,000 worth of profit that they're looking to put somewhere else, and they want to come into your syndication. Well, how do we do that? Well, first of all, the investor has to come in and own direct title to the property. Again, they own direct title in their prior property that they sold, and now they need to buy another property in the same manner that they held the original property. So in this case, we're going to assume it's done in their personal names. And let's just say, again, for example purposes, as a syndicator, you're raising $1 million and this investor has $100,000 worth to invest with you. Well, this person would come in and own 10% direct ownership of the property, and then your syndication LLC over here would own the other remaining percentage of the property, in this case 90%. So investor owns 10% direct ownership, the LLC owns 90% direct ownership, and we tie this together with a TIC agreement. I'm botching that completely, but a TIC agreement. And that way, your investors over here for your traditional syndication are owners of the LLC, and then the LLC will own 90% of the property, and then your 1031 person will own the property directly. Now, from a cash flow perspective, the property is generating cash. The first thing you're going to need to do is have what's called a TIC bank account, which means it's a bank account that's controlled by both the LLC and the individual, but that's where the initial capital goes from the operation. So let's say this particular month, the property threw off $20,000 of distributable cash. That $20,000 first has to go into this TIC bank account first. That's the distribution. 10% of that would go to the investor, the direct investor. The other 90% would go into the LLC bank account. Okay, so that's the second level. So the first level is from the property into your TIC account, which is controlled by both of you. And then once it goes into the LLC account, then you can distribute those monies to your investors pursuant to your terms. So again, it adds a layer of complexity. So I typically don't recommend doing this if your investor's only coming in with maybe 50 or 100 grand, because you have to revamp your entire paperwork. It's also a little weird because your main syndication over here, you're raising money not to go buy the property, you're only raising the money to go buy 90% of the property or 80% of the property or 70% of the property. So that's something to keep in mind. I don't know why I lost my train of thought there, but essentially that's the way that we like to do it, and it works pretty well. But again, you want to make sure you're constantly communicating with your CPA, you're constantly communicating with your 1031 exchange intermediary, but at least from a security standpoint, we can pull it off this way. Hopefully you found value in this, and we'll see you at the next video.